L. Mm. Yeah, so the UK's number one gold trading contestant strategy. We're gonna start through with exactly what I do, okay? Exactly what I did, and yeah, how I did. So we have simple things like the Asian session. This is the list. Here we have the Asian session, which is where price accumulates throughout the Asian and Australian. And Australian, I don't know, whatever active thing. Then we have the next thing, which is the bars, basically. No, I'm just kidding. We have the reversals because this is a intraday reversal strategy. Okay. Okay, let me highlight this so people can. It's really simple once you get whatever of it. Okay, I'm doing it. So we have the next thing, which is fairly straight, is the reversal patterns. And the reversal patterns is what makes everything work, but we only focus on one pattern because this is the most powerful pattern and it's the only one that correlates with the, you'll see in a second. And this pattern, this reversal pattern, is actually it's like a holy grail or something. I don't know. It's like, wow, literally just wow. Like there's no other words for it. You'll be surprised. You'll also be surprised by the way we structure the market. And yeah, this is the same method that I used to get the number one gold trading contestant placement. So this is actually probably one of the best strategies out there, if not the best one. I got it from I don't know. Anyways, I kind of came up, I don't know, but whatever. So yeah, this strategy is like, it has done 20 times monthly profits. You literally, this is per month profits. that's based on data that we have accumulated. It's literally, I can show you. 1 second. I don't know what to show you, but let's go on my TikTok. Uh, it's on my TikTok. But these are the kind of results you would expect. Also, I no longer do signals, but if you wanna like, um, I'll put a link down for a referral code where you can get 35% bonus credit from an actual top tier regulated broker, and they're one of the best brokers in the world. They're blueberry markets, so you can connect with that if you want to, and you can get 35% bonus credit on your first deposit. So it's really cool. You don't usually get that anywhere. And this is the first place qualifier. Like I said, I no longer do signals at the minute. I guess so. Yeah. And then if you want, you can follow it up. My TikTok, you saw what it was. So structure of the market. We go through the next phase, which is, so this is phases, right? The phases of the market on an intraday level. So there's a lot of strategies that might be similar out there. Maybe, I don't know, but I don't think so. I don't think anything is like this. I did look. I did try to find something like this before, and I didn't. So it was really difficult. It took loads of years to like come up with it and do it all. Um, yeah. Um, like it just says right there, 8 years. Yeah. Then we have the fakes. The fake. So basically, what to be aware of. Basically, you have to be aware of not making. Well, not making. It's like you just have to be aware of when to enter, how to enter, because there's zones, right? So there's zones. There's a buy and a sell zone, which moves. The zone moves, okay? It moves up and down with the market, and it will accumulate price liquidity or whatever at that point. I'm not even gonna go into the spectrum of things, but yeah. Let's go for it for this day, for example. Let's just start fairly regular, right? So as you can see, we started off with a simple Asian session. So we have the Asian session. So Asian session begins from around 8. So I'm in London time. So it's from 8 in the afternoon to 8 in the morning. Okay. I have a, what's it called? I have an indicator, which is my own indicator. I can leave a link or whatever down below that you can use it as well. If you're in London, I don't know, you might be able to change it if you're in somewhere else, but this indicator will specifically highlight to you where the zone is. Okay, the full thing. So from 8 to 8, and then we have, you see these lines here, this is the lines, right? These are the lines I keep in my mind while I'm trading. So let's pretend we're trading on a normal day. let's just pretend we're trading right now on a normal day. So it started from here. Let's move all this way. Okay. So let's say we started trading from here. It was 8 a.m. Okay. I usually wake up later, but it was 8 a.m. The market rolled through upwards, right? So nothing is really happening. Right now, this is all insignificant. And why that is because of the levels. So the levels the levels play. What did they play? I don't know. What did they play? So anyways, the levels. Mm, so the levels play a key part in this whole structure. So let's go back to a day where there's actual levels. So because this one didn't have any levels, as you can see, this is what you have to know to stay away from. So this one, because it didn't make a level is exactly this thing. Don't ever interpret it as anything else. This is an exact um, level. This is how the levels are. There's no other way to put the levels except this way. Not like that. So you have one break. So we have one movement up, then it comes back, then it goes through. Okay, and once it's passed through, it's simple. It's like it has to pass through this part, this high, right, and close above. It's just that simple. It just has to close above. As long as it comes back and doesn't go below here, because if it goes below, I'll show you in a second. But we have a break like so. It's just as such. It goes up, it goes back, then it goes up. Okay, and that's it in simple general terms. There's nothing more to it. Where's my pen thing? I don't even know how to use pens. I do know how to use pens. Okay, let's find it. So yeah, your level will be basically just that. Okay, and this is what I was gonna say about this. So it comes back, and if it goes below, okay, and then still closes above, then this level becomes insignificant. Why does that happen? Well, it's pretty simple. It just physically becomes insignificant because it's gone below. So this is the new level right here. Okay, depending on wherever that is, but that would be the new level. Okay, this thing here that's where the level is. Okay, at the lowest low, depending if you're moving up or down in the market. So let's just say, for example, we have this day here. We had one up movement, one down movement. Okay, and then we closed above this section here. So physically, we have one level. It's just one level. It's right here. There's nothing to it. We don't we don't really mess with this. So once the market starts rolling, okay, from the 8 a.m. Asian session, I mean, yeah, we don't do anything unless there's two significant levels. Unless we've had two levels, right? So this is part is important. Two levels is the start of the market. Okay, that's literally where it is. It's the start of the market for that day. Unless we have those two levels, there's nothing more to it. It's literally just one level and that's it. There's nothing to it. It's just accumulating price, doing nothing. I mean, I don't know what it's doing, but that's what would assume. That's what I say, anyways, for my strategy. So, Okay, let's look at this day here. Okay, this day is important also. So coming back to terms with this, it has to break out of those lines here. See these lines from the accumulation period? It has to break out. If it doesn't break out, it's just price accumulating in this place. It's still in the same place. So it doesn't matter that we had this wick here. It has to be a close below, okay? And yeah, let's go through this. So this one was basically no levels happened on this day. So we move back. Okay, and we check this. This one had a few levels. So let's mark up these levels here. Very, very simply. Mm, okay, where is the squares? Okay, cool. Let's start with this. This is the first level. Okay, so we can see there's a level there because why? It broke out. I mean, it went, yeah, out of the line, went back as a return fold, and then continued. Okay, it continued with a close below. So I marked that as one level. Then we have the next levels, which would be this one. I don't usually mark these levels anymore. I just, yeah, but this is how you should do it. You should just mark the levels, or you can just interpret them yourself. But you have to check the closes. So this closed at 3, 3, 4, 5, 5, 5, 5. This one closed at 5, 7, 5. So this one was lower, but we don't really mind because this level got devaluated or whatever. So because it went past back, so this just becomes one level after the continuation. um yeah, let's just continue forward. So we have levels after levels after levels. I can just keep marking them quick. So we have this level, okay, then we have this level, then we have this level here. Okay, and those levels, they get devaluated as soon as this happens, depending on where it went up to. So it went above those, but not above that one. Okay, it's very simple. And this is the structure of the market that we are interpreting or whatever. So we have that. Then we keep moving forward. And as you can see, it hasn't really been a day where you have an entry. It's just been levels after levels. But we do have something very spectacular happening on the markets altogether, however, which I haven't really gone into yet. It's the sell zone. So the sell zone starts after two levels. So after two confirmed levels towards one bias direction. So this whole thing above there is a sell zone. You see? There you go. And let me mark it so people can, so you can actually read that. It's there. Sell zone. Okay. Why is that a sell zone? It's pretty simple. Two levels confirmed. Okay. Let's be so simple with it. Always keep it simple. Two levels confirmed, right? It's just that. It's just been two levels confirmed. We have the first level here, the second level here. As soon as this happened, we know that this is all a sell zone, and it starts from the bottom of the accumulation. Okay, and that's how we get the day moving forward continuously. So we have that. This one, I remember this day I was asleep. I was sleeping. So I entered late, but we have this here, okay. Okay, and what happened here was all liquidity got dumped. In a way, you can see the jitters on the market, but we don't even think about that. We just think, okay, levels, next level, like, you know, we just mark up levels. So we see here exactly where the price went above this last level and closed and made a new level. So there, right there, is where it happens. It goes above, closes, it comes back and closes above, and we have our first level, our very first level in the opposite direction. Okay, and now this is when we can start, you know, not seeking out, but we can wait for the pattern. And the pattern for entry is just super simple. It's just this. Okay, don't tell anyone, it's a secret, but look, it's just whatever followed by this, followed by 1 or 2. Okay, however, we can interpret it as anything. We can physically do this. Where is it? Yeah, we can interpret this as also as this, right? It can just be, even if it was just one, it can be like this, right? So it can be either like that, or it can be like this. It can go up, make one level, okay, followed by another level, unless we have two position dumps here. But if we have two position dumps this way, this is fairly normal as well. It's just regular, as long as they don't pass below this close, this last bomb close. Okay, super simple. It just doesn't go below that. So this one did not go below there, and this one did not go below there either. Okay, if this, for example, was to close here, okay, on its way down, and then close back up, it's still basically the same as this. It's nothing different to it. So we have that going over there, and then yeah, that's the two levels that we were looking for. And as soon as that closes above here is our entry. Our stop loss goes below here, the lowest low here, during the pattern. So would be here, or would be here, or would be here. Okay, same thing. And as you can see, we didn't really get any profit today on this, but yeah, you get days like it depends really on the market circumstances or whatever's going on. But the last part of this market structure is the buy zone now. So the buy zone is from this candle here, okay, the wick, the highest point before we moved with a correlated, you know, whatever it's called, entry. So before the market reverses, and this will be the buy zone because we've had two levels. Okay, if you just have the other pattern where it's physically only like this, you can't correlate this as a buy zone until you've had the next level. Okay, remember, a zone is marked by two levels. And that will be that will be everything for that. So now we move on to the next phase, which is it's just really simple. The market just continues moving like this throughout the day, and we always get out at 9:45 p.m. So we have this is another level, this is another level, and you mark them throughout the day. Okay, and we have this point here, right? This is the point we came to. Let me delete the other thing. Yeah, so because the market did not reach, this is a gray area at the minute. This is all empty liquidity or whatever. We have nothing to trade here with. So if the market does structure reversal in this point, unless it's reached the sell zone, which is all the way up here, we can't enter. There's no entries. It's just an exit, okay? It's physically just an exit. And that exit will accumulate for us to await our next entry to the buy side. Unless it does continue to go up, which if it does reach the sell zone, then we wait for a sell entry. So as we see here, it did make a pattern of a double. We have one and we have two, okay? And that right there is our close, okay? Whatever that is, the close, which was below, which was the close, okay? Oh. And yeah, that is our close. Right where that is, we have nothing else happening afterwards. It's just like, I guess, a little bit of profit, whatever that is. Let's talk TPs. TPs is, it goes from, I guess, 1 to 3, so like that. Then we do 1 to 6. Then we do 1 to 9. Or you can do it how I did it during the contest, which is 1 to 2. And how I have been doing it until I changed it. I did 1 to 2, 1 to 3, and 1 to. So we always keep 1 for infinity. 1 is always infinity. And then we have 1 to 5 on this one, and 1 to infinity. There's always 1 to infinity. So we have that, and okay, let's talk numbers. I know a lot of people probably care about how much we make with this during wartime. I mean, not wartime. What am I talking about? During times of, markets not having correct, not having like the correct structure. You might not make anything. You might just work, and they might not make anything. But this is why this strategy is so powerful, because it allows you to multiply your profits by 20 times in a month, depending on how much you're risking. So if you're risking 50%, which is just like I showed you, you do 1 to 3s and you just risk 50%, then you can keep accumulating the profits based on statistical results, backed by actual data. So you can just literally risk 50% every time, and that's all you have to do, just risk 50%. You don't need to worry about why or why not. It's just how it is. I've had members that did risk only like 30% maximum in my signal service, and yeah, they made a lot of profit just by risking 30%, but they didn't do the same TPs. They kept the TPs to infinity, and you can do that as well. You can just get out at the end of the day or whenever there's a reversal, because we can catch these reversals so accurately, as I showed you in my previous posts. Okay. This is just something basic. This is not. This is like a normal kind of thing, basically, to catch the reversals on this order. And you can see exactly how I did it. So, because I just showed you, we have a reversal followed by a reversal here, followed by another reversal to a lot. Right now,